We are now in the advanced financial reporting of 3rd September 2021, and the first question I'm going to present the question and the answers. And the first question was a question on group accounting, which required a consolidated statement of profit or loss for the year ended 31st March 2020 and a consolidated statement of financial position as at 31st March 2020. Question 2. Part A, Roman 1, the required basic EPS, that is basic earning per share, for the year ended 31st December 2020 in conformity with International Accounting Standard 33, earning per share. Roman 2, diluted earning per share, EPS, for the year ended 31st December 2020 in conformity with International Accounting Standard 33, earning per share. Then part B, required by applying the requirement of IFRS 8 to the above information, explain which of the following above businesses of the Tadaza Limited are reportable segment. So that was a question on segment. Question 3. With reference to deferred tax, differentiate between permanent differences and temporary differences. Then Roman 2, required, determine the deferred tax asset or liability for Huruma Group as at 31st March 2021 in conformity with International Accounting Standard 12, income taxes. So that was a question on deferred tax. Then part B, it's a question on employees benefit. So required, extract from the financial statement of Peponi Limited for each of the years ended 30th June 2022, 2023, 2024, and 2025 to reflect the above transactions. Then question 4, required, citing relevant examples, explain the two main types of hedge and describe the accounting treatment in the financial statement of an entity. Roman 2 of Part A, required, show the relevant journal entry to account for the above transaction for the year ended 30th June 2021 and explain whether the cash flow hedge is effective or not. Part B, in the context of International Public Sector Accounting Standard IPSAS 22, disclosure of financial information about the general government sector, explain the term general government sector, GGS, identify the disclosure that should be made in respect of the general government sector, GGS. Then question 5, explain four limitation of ESOB, conceptual framework for financial reporting. Then part B, International Financial Reporting Standard IFRS 13, fair value measurement, provide extensive guidance on how the fair values of asset and liability should be established. Required, with regard to International Financial Reporting Standard IFRS 13, briefly describe the fair value hierarchy of inputs for arriving at fair value. Then part C, calculate the impairment in conformity with International Accounting Standard 36, impairment of assets that should be recognized in the group financial statement for the year ended 30th September 2020 in relation to Agaza Limited. So these are the suggested answers. We have the first one is the consolidated statement of profit or loss for the year ended at 1st March 2020 for H Group Limited. Then we have the workings. We have working 1 of the goodwill. We have working 2, working 3, working 4, working 5, working 6, up to working 7. Then after that, we have the consolidated statement of financial position of H Limited Group. And then from there, we go to question 2, basic PS. Then we have the diluted EPS. Then we have part B. Then we have question 3, difference between permanent differences and temporary differences. Then we have Roman 2. Then we have part B. And finally, we go to question 4. We have type of hedges. We have fair value hedge, and this is the fair value hedge. It's have explanation and an example. Then we have the cash flow hedge, explanation and an example. Then Roman 2, the journal entries. We have part B, Roman 1 and 2. Then we go to question 5, part A, the theory part. Then the hierarchy of input for arriving at fair value. We have level 1 inputs, level 2 input, and level 3 inputs. Then we have the part C, which marks the end of this presentation. And if you want a combined PDF from 2015 to 2020, you can download it in the comment or description at just 100 shillings.